All right, folks, welcome back. We are looking at the dollar index. This is our daily chart. And we can go back and now look at some things that we were considering in April. So I'm going to counsel you to go and look and study the April 22nd. Let me make sure I got my notes right. April 22nd, 2020 and April 29th ICT market review. So check out those two commentaries and then watch what you see here. Okay, this is going to be a brief one, so that way you're not spending a whole lot of time. No packing of a lunch required today. It's going to be a short one. All right, so the dollar index, as you can see, we traded down into the BSI here, buy side imbalance, sell side inefficiency. This is one of the areas we were looking for a discount. We were in a range. We were stuck in this range until we broke market structure here. And notice that the candles only wicked through it. Okay, so I'm not requiring the market to have a close below an old low. When it comes down below an old low and it's shown an unwillingness to go higher here, look at SMT in here on your own study. You can see some divergence between that in euro dollar. So that's why you're getting the extrapolated move on the downside with dollar and extrapolated move on the upside, as we'll see in the euro. So we have a break in market structure here, and then the market comes back up inside of this SIBI here, right in here. So it goes back up into it, doesn't completely fill it in, goes to consequent encroachment. Again, if you're new, that's all explained in the commentaries lessons. So you can see what that is in regards to what I'm referring to. The last three up closed candles is our bearish order block and the midpoint or consequent encroachment of the gap that makes the tail. We also call this a gap as well. So midpoint of that, draw that out in time, and consequent encroachment of the SIBI. We have a confluence of a premium array. The market makes a dive back below relative equal lows and then attacks the sell side liquidity pool here and here, and ultimately drives down deeper into our buy side imbalance, sell side inefficiency in the form of a BSI. So while we have moved to a delayed commentary because there's some undesirables in here and I'm going to get you, we are working in some hindsight data, and I'm acting as a review of this, but I'm not going to really forecast anything going forward. So there ain't no outlooks here. I'm only talking about what's in the rearview mirror. So if we look at the YouTube reviews, okay, or the Optimal Trade Entry Pattern Recognition series, it's a mouthful. Those videos, you can see I've sprinkled them with a little bit of bias, whereas I would usually do that in the weekly commentaries, midweek and end of week. And some of the examples, I was pointed to certain pairs, certain markets going a certain direction. And all of that supports what we were talking about in April 22nd, April 29th review. So this down here is in fact where we traded to. Now, I will say this. While it still could come down here, be mindful of the volume imbalance that's right here. Okay, so there's no real bodies of the candles, only the wicks. So we could get a little bit of a bounce in that area and rebalance at this point. You could go a little bit beyond it, but just be careful with that. And if it does do that and then we start to sell off again, then, you know, this would be a reasonable objective to completely fill that in down to this candle's high at 96.69. Okay, and that's about as far as you're going to get in terms of forecasting in this review. So let's go down to the hourly chart. All right, so here's our hourly dollar chart. As you can see, we had broken down rather nicely. Now, I want you to think about what I was showing and what I have been showing in my YouTube channel, revolving around the optimal trade entry pattern. Now, from a swing trade perspective or a short-term trade perspective, not an intraday where we're only looking at that little 8:30 to 11 o'clock in the morning New York session that I basically made up for that model on YouTube. You all know that's not our kill zone, but if you look at the optimal trade entries that reside in this chart here, we have here, there's your optimal trade entry short. Here's one here. You have 1, 2, 3. It goes a little bit deeper, yes, but it doesn't go above. And we have another one here, and we have another one in here. Ultimately, right before we trade down into that daily BSI, and again, that's what these levels are. If you're new, and it doesn't seem like I'm giving you a lot of detail in the lower time frames, you have to make sure you note what the levels are on the daily chart before we move down to the lower time frames, and then you won't lose track of where you're at in regards to all of these specific levels. All right, so that's a beautiful study for you there. Let's go down to a 15-minute time frame. All right, so here's the 15-minute time frame on the dollar index, and you can see a lot of the fair value gaps in here we get traded up into. We have a SIBI here, sell side imbalance, buy side inefficiency, goes up into that as well. Creates an opportunity where relative equal lows, optimal trade entry, and then we gap down. Notice that, see that gap down, and it does not get filled until over here. What was the catalyst before it could bounce back up into it? It had to break down into that daily BISI. So it trades down to a point of liquidity, and then it goes back up to rebalance this. So time will tell whether or not this was an exhaustion gap that takes us down into the BISI, and if we get a deeper retracement. There's a lot of discussion about certain, like, the state I'm in at the moment right now, they're moving up in their stage 2, so they're allowing more businesses to open up, and that's good. So you have to play it by ear, because if we can get control of all the civil unrest that's going on in the United States, and we start to move towards opening up more of the businesses, that's going to help the dollar. But as long as we stay in this slow rollout, the lower level discount for that daily BISI will be the likely target. All right, so let's go over to euro dollar now. All right, so here's the euro dollar. This is our daily chart, and again, this is not going to mean as much to you if you haven't already watched the April 22nd and the April 29th videos. Okay, so that commentary, or those commentaries I should say, I outlined an idea that if I were making the market for the European Central Bank, and no I don't, but the low here, I would take it down below that and then reject it, or refuse lower prices there. The market does come back down again, touches it here, consolidates, and then we have another run. Notice the imbalance that's created here, coupled with the order block, the last two down closed candles, the imbalance in the form of a BISI, the market structure break here, breaking above this short-term high. Then we trade back down into the order block. Then the reverse of what was outlined in the dollar index sends the euro dollar higher. This area up here is one of those levels that I talked about in the, I think it was the April 22nd video. You can see it appear in that chart. So I just extended that out in time, and you can see we traded up into it beautifully. Now, I don't know personally right now where we're at, if the euro dollar just starts to really start to run and clear the rejection block over here, or does it stall in here and allow cable to catch up? So I'll talk a little bit about that when we get over to the British pound. But this beautiful run here is one of those runs that if you wait during all the uncertainty, and then when the market tips its hand to you, which it does here, you don't rush in, you wait for it to come back down into the BISI. You get a institutional order flow entry drill as an entry pattern, and again, that's taught in the commentaries. So if we see it trade down into there, we can start to see it rally higher. Even this candle here opens, trades down into the order block, picks up more orders, and then rallies, clearing the short-term high here, and then up into this right here. Now, I'll show you what that is, because I'm sure you're probably saying, what is that? Because I didn't watch the video like you told me to. Let me get that out of the way. All right, so it's this candle's low and this candle's high. So it's that one single candle. So that is the fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency. All right, so here's the euro dollar hourly chart, and what a really nice trend that is. Beautiful, multiple optimal trade entries in there. You can see this one here, we have one here, another one here, another one here, and we have one in here. And like I said, if it has to correct, this area right in here is where the near-term sell side liquidity is. So they could come down in here, take out these relative equal lows. It doesn't have to completely come back down into the order block there. It would be better if it didn't. It's better really if it doesn't even go down at all. But if it does need to retrace, it needs to maintain some bullishness in here. If we give up this low, then we're probably in some deeper retracement, or maybe altogether a reversal. Again, that's contingent on whether or not the economy is able to open up more and we get the civil unrest, controlled at a better degree than we have now. All right, let's go down to the 15-minute time frame. All right, so here's 15-minute euro. And again, you can see there's that imbalance here. We don't want to see it go below this area here. Even though there's relative equal lows, I like the fact that we went lower here than there. So that could be a little bit of a line of defense for IPTA. But in here, that just, I mean, your eye probably jumped to that just as fast as I mentioned it on the chart, which is good. That means you're learning. But we don't want it to go below this move here. So this market protraction that took place there, they shouldn't see price go below that. If it does, like I said, it upsets the near-term bullishness on your. It doesn't completely remove it, but just makes it more of a waiting game to get back in line with bullish institutional order flow, and then we can resume looking for continuations on the upside. But just be mindful where we are right now, because it could just go choppy and sideways. And it also is the first week of the month, so you know our typical protocol there. We try to do all of our trading by Wednesdays, New York Open, and spectate on Thursday and Friday. So let's go over to cable. All right, so here's the British pound versus the US dollar. This is our daily chart. And again, you'll only get this if you go back and look at the old commentaries. But I mentioned how, if again, this is something I would expect it to trade down into the BSI, buy side imbalance, sell side inefficiency, just below this low right here, that low right there. Just dip its toe in the water and then reverse, and then make an attempt to get back above these equal highs and potentially up into this order flow over here. So again, if you look at the gap, which is the tail of this candle right there, split that in half, extend it out in time. That's one of the levels I was looking for if we were able to get above these relative equal highs. Do we need to come back down in a form of a retracement? To me personally, I wouldn't want to see it do that. It's so close to the equal highs. There's really nothing in here that would justify a complete and utter breakdown, unless something completely comes out of the blue, which I couldn't even at the top of my head think of what that might be. But I do suspect that it wants to get above the buy side liquidity. So those bias or characteristics of what we would be looking for, or I would be looking for, it would be pretty safe assumption that they're going to try to get above these equal highs. Now, do we go through that and start really tearing off to get above the buy side liquidity here? I'm not trying to get that far ahead of myself, but in here, we definitely do have a breaker, and we do have the gap, the consequent encroachment of the gap on this candle's tail. So we split that, extend out in time, and go and watch those videos from the 22nd and 29th, and you'll get more insights in regards to all that. But let's drop down into a hourly chart. All right, so here's the British pound versus US dollar on a 60-minute basis. Again, really, really nice order flow. Buy side imbalance, sell side inefficiency. We come down into it, rebalance to the order block, optimal trade entry, another optimal trade entry, and don't go to in here. We do get institutional order flow entry drill there, and optimal trade entry there, another one in here, another one there, and another one that we are presently in, but we have equal highs in here, so they may need to come down for some discount. Maybe trade back into this order block, maybe reclaim that. I don't believe that they're going to leave those equal highs on the daily chart unprobed. So I think that regardless of what we see in here, it's ultimately going to get above those equal highs. That's gun to my head. Tell me what you think is going to happen. That's what I absolutely believe that they're going to do. But because we have the effects of first week of each month still, do we need to retrace first, and then it monkeys around, and then it does it later in to next week? That is the uncertainty. That's the part of the first week of each month that brings uncertainty. Like I said, I don't try to force my opinion. I don't try to force my view or my bias, if you will, the very first week of the month, because this non-farm payroll circus conditions, and we don't like to do that. And we want to keep things as pure as we possibly can in terms of price action. So let's drop down into a 15-minute chart. All right, so here's the 15-minute chart for British pound. This particular time frame is a little muddy. Okay, now, until you get down to the lower 5-minute chart, it's just a lot of sloppiness in this particular time frame for cable, and I think it's indicative of a large move coming, because you can see all the ranges are it's basically drawing tighter and tighter and tighter and smaller, and we're going to start seeing large ranges like we saw in the euro dollar, large ranges on the daily time frame. So right now everything's real quiet with this particular pair, and I think we'll start to see a lot more volatility enter into this one. And again, don't be surprised if it requires non-farm payrolls nonsense or into next week on Monday. So look for your New York session ideas like I'm sharing on YouTube, and you learn more of in this mentorship concerning optimal trade entry. But really focus on between 8:30 and 11 o'clock over the next few days with this, at least until we get to a point where we're trading above those relative equal highs on the daily chart for British pound. Okay, then we have to see if it has the ability to continue like the euro dollar did. But there's such a gap between euro and cable that it just makes sense for cable to allow its ascension, and euro dollar can just sit consolidation basically and allow cable to catch up to it. And I think that is going to be it. Yeah, I will give you guys an interesting price action lesson this weekend. It will not post until 5 p.m. Sunday. So again, I have plans for this weekend. I will be away from Twitter even on Friday, so I won't be talking much, so don't freak out. And I think that's going to be it for now. So until I talk to you tomorrow, I'm sure on Twitter or by way of the YouTube video I'm going to post later on tonight, wish good luck and good trading.